Good morning and welcome to the Place Your Trades Network. I'm your host, Swing Pony, and I'm going to be joined by my friend Michael from DTR Trading today. What a fun morning already. I mean, we've been in an absolute chop zone, and of course, we get the market breakdown, before open. So, I'm really excited to have Michael join me here, and we can sort of discuss the price action that we're seeing on ES. And we're also going to discuss his 3 out of 3 system that he uses to apply to event contracts and how to navigate the choppy market and the price action that we've been seeing. Before we get started with all of that, today's episode is brought to you by Tradeovate. We are going to be discussing their app that's all about event contracts. So simple yes or no. You don't have to worry about strikes. You don't have to worry about all the other stuff that you do with options. Hello for my kitty. You don't have to deal with, the extent of the Greeks that you do with traditional options. So it's a really great intro to that world. So if you're tuning in for the first time, please go ahead and like and subscribe our channel and stay tuned into future episodes. All right, Michael.
Good morning. Thank you so much for having me. Even if you aren't a first-time viewer, you should like and subscribe, and so you make sure you never miss any fantastic content that gets put out here every day. Yeah. If the animal demands it, then it has to happen.
The animal demands it. Okay, so fun price action, right?
I mean, we're finally getting, hopefully, some follow through. Like, this has been a crazy week with 2 inside bars. And any day, like any week where we get half the price action of just pure consolidation, hopefully when we finally get this breakout, right? If we can get that enthusiasm to step in, this is where we can get, this is where we can get that trend day, right? So that's what the fingers are crossed for. But it seems like, Choptober has been pretty painful, and it's like 2 tradable days a week. So having these sort of like binary outcomes has actually been, I think, probably quite helpful for a lot of traders.
Yeah, 1000%. So let me pull up the trading view chart here. Let's see what ES is doing right now. Okay, so, we had, zoom in here, quite a few days of consolidation there, right? 1, 2, 3, 4. I mean, the price action there was, not gonna lie, like my mental capital was just destroyed by that price action.
It has been draining. Like the last 2 weeks have been draining.
1000%. So definitely a less is more kind of market. We are finally getting that big breakdown. I'll be curious to see where we go from here because, like you and I mentioned, it would be lovely to get some continuity, but I don't know. I'm kind of
easy trade is to the downside, right? Like we can see, like we've seen that sort of price rejection there on the 15th. And like that sort of trend line rejection there on the 15th. And so, if we're going to be bullish, right, we kind of have to invalidate that rejection. So the path of least resistance, right, is sort of that continuation. The most frustrating part, or like what, creates that sort of slow reaction or that like, uncomfortable feeling is that, okay, after that rejection, why didn't it break down sooner, right? Like, why did we get that consolidation? Why couldn't we get that formal indication of strength, right? If bears were actually super strong, you would have anticipated them to be able to push down price action immediately.
Right. So it'll be very interesting to see where we go from here. I would love to, have the trend days and just have it be very consistent throughout. But I am kind of looking at that 3,900 level. I mean, if you see here back in May, we've kind of reclaimed it before. We've broken and reclaimed. That's where we closed. I mean, there have been a few little bounces in levels of support there. So
you can see them supporting that gap though, right? Like you're saying, like even though it wicks down into that sort of 3,900 area, like down towards that 38 zone, all you see is sort of bottom heavy wicks, right? That are like, if you imagine the body of the candle's an arrow, like those arrows are pointing up.
Right. Yeah, 1000%. So I'm very curious to see what happens when we hit 3,900. The one thing that I've learned with this market is they're really not going to make it too easy for either the bulls or the bears. So very much a 1 day at a time market.
Oh, 100%. Like find a little short-term trend. You hope you can ride it for a couple of days and then catch your breath, let it consolidate, let the Fed speakers, try to get the celebrity status. And then there's a few more tradable days.
Yeah, absolutely. And speaking of a one day at a time kind of market, that's what I really love about these event contracts. I know you don't have access to them in Canada, unfortunately.
I'm working
But
on that.
yeah, but the thing with the event contracts, to anybody who's tuning in for the first time and isn't familiar, basically, you don't have to deal with as much as you do with like traditional options. So basically, you're only trading the day's price action. You know, is it going to close above this? Is it going to close below this? Yes, no. You place your bet, and then you have, you know, a maximum risk and a maximum reward. So unlike options, I'm not constantly holding out and thinking, okay, could I juice this for more? Could I juice this for more? And then having the trade turn on me. I mean, it's a very defined risk reward, which is what I love. And when we have days like this where the market's a little chaotic or we have chop days, it's a lot easier to just deal with that one variable of where we're going to close versus trying to day trade or scalp the price action all day.
What's fantastic about event contracts for me is that it's like kind of like you're mentioning, that plan of how you're going to manage that trade is kind of baked into your decision already. So because you know what your max profit is, you know what your max loss is, that helps remove so much of the anxiety that you get from your trading. So instead of having to be super obsessed about your execution timing and are all my variables all lined up, you just have to have confidence in your technical analysis. And then it's like a fantastic sort of starting point on to really like learning on how the market works and building that confidence.
1000%. And I'm excited to have you here because I know that you have a 3 out of 3 system that you utilize. And you said that this could actually be super helpful for event contracts, right?
Yeah, so I'm a pure day trader, so I don't hold anything overnight. I evaluate the market on a day-by-day basis. Some days, you know, if it's bullish price action, I'm looking for that continuation. My objective as a trader, right, is I'm looking for daily breakouts and daily breakdowns. So the way I've kind of tried to quantify that technical analysis is with what I call the 3-for-3 system. There's 3 sort of key elements to a sort of strong trend, and that's, you know, you've got a strong sort of breakout, right? You've got a sort of strong trigger. You've got a strong sort of, you know, indication of, you get strong visual confirmation, right? And then you get strong volume. So, you know, candle shape, volume, and then the overnight gap are sort of how those 3 things are sort of visualized. So with futures, it's a little bit different, right? Because you're not going to say get that gap. You're going to get that sort of visual of price action, how it's behaving before, say, US Open. But what we're trying to do, right, is we're trying to determine or interpret how strong was yesterday's price action. Is that visual telling me the same story as the volume?
So that's number 1 is how strong was yesterday's price action?
How strong was yesterday's price action? And that's determined by the candle shape, right? Strong price action should be strong full body candles. It should be, we shouldn't see top heavy wicks or bottom heavy wicks if we're, you know, bullish, right? We should see consistent, easy narratives. If we see strong bulls or strong bears, then we're expecting to see strong conviction in that volume, right? So on any full body bullish candle, right, or a candle that doesn't have very many wicks, I'm expecting to see increasing outlier volume, because if bulls are actually strong, then I need to see that visual evidence of there being more bullish momentum inside the stock. And then the final thing, right, is if I've got strong candle shape, right, and I've got strong daily volume, then I want to make sure that today's price action is telling me that same consistent narrative as yesterday's price action. So it's just building off of that strength. So if I see yesterday's strength and today's strength comes in, then I've got high conviction or a high probability chance of me getting that easy follow through. So if you apply this on a sort of daily time frame, right, you can see, okay, strong candles, right, strong volume, and as long as those haven't been invalidated, right, that's kind of the trend that you're looking to follow. So, you know, on a day-by-day basis, right, you can just kind of say, good example here, right, is like Thursday, November 10th on the ES, right? You got a really nice.
Let me pull that chart up real quick.
Yeah.
I want to follow along. And then we'll look at the event contracts too and see how we can apply that. Okay.
So this would be what I call like a 3-for-3 type situation. So it's that big green bar here, right?
So you said from this Thursday.
Yeah. So big green bar, right?
Massive green bar.
Right. So massive. You can see clearly in that candle. Okay. Really, really strong looking candle. That volume profile, if you could bring up like just a typical volume standard. Yeah. You can see, right, that candle and that volume shape, right, is telling us that same consistent narrative, right? We're seeing really strong price action, and then we're seeing a lot of enthusiasm there from bulls. Next day, right, we get a little bit of a gap up where price action opens up just a little bit above, say, previous highs. And so we know we've got indication there pre-market, right, of that momentum. So we've got confidence that on that next day, right, we're expecting strong follow through. Now, unfortunately, right, on that Friday, you never got that sort of increasing, you never got that, next sign of increasing momentum. So that's why that trend didn't continue. But pre-market, right, you had that really strong base to build off of. Now, where this starts to get tricky, right, is you're not every single day going to get 3 for 3, right? Not every single day is your candle, your volume, and your price action going to tell you the same story. You're often going to get sort of inconsistent narratives. So it becomes sort of like a balance of powers, right? Like this morning, for example, on the ES, right? Okay, yesterday's price action, second most bearish looking candle, decreasing volume, right? And then this morning's price action has been a lot more bearish than bullish. So everything that we're being told there, right, is that, okay, so far yesterday we had bearish momentum, right? Maybe we didn't have as much momentum as we would have expected to see, but then this morning's price action seems to be confirming that story. So as long as this morning's price action is telling us, showing us that strength, then we've got on a balance of powers, right, a higher probability of this being a bearish day versus a bullish day. So we're just looking to continually support, right, whatever sort of narrative we were told yesterday and looking for as much continuation towards that story. If for whatever reason, right, today's price action was, say, incredibly bullish, and we only had, say, a bearish candle, then that for me would be an opportunity to avoid price action. I'm being told that I don't have a very consistent narrative to take advantage of. Neither bulls or bears are in control here. So I'm expecting a little bit of choppy environments. And that's kind of what we've seen here over the last couple of days. So if you applied the 3 for 3 system, you would have avoided sort of trading in yesterday's inside bar, because you knew that, okay, we're not telling a consistent story.
Yesterday was the day to not trade. To anybody who sat it out and just watched or preserved the mental capital, I mean, that is exactly the kind of market action that's like
just drains you.
Just don't. Just go do anything else.
Makes you hate trading.
1000%. Like I always say, there's like losing capital is hard, right? But losing mental capital is like
doesn't recover.
You don't get the recovery, no. And so I think, being patient and waiting for that consolidation to occur and seeing where the move actually goes often ends up being so much more lucrative.
The point, I think, with all of our like pre-market decision making is to try to be as systematic as possible, right? Because if I'm super consistent in how I apply my technical analysis and identify, okay, which days are good for my trading and which days aren't good for my trading, it's really easy for me to learn from that. Because if I'm consistently sitting out on days that end up being busy, well then, okay, I know what I need to change, right? I need to change how I'm looking at things. But if I'm consistently rewarding myself, right, for like, I like to say that losing less is winning in disguise, because if you avoid those days that, really draw down your capital, those like, that 3 days a week, right, or 3 days a month, sorry, that you have that, 5% drawdown. If you can avoid those 3 days, it is so much easier to be profitable. So having a consistent process in identifying what conditions are tradable for you helps you kind of get to that point.
Preserving that mental capital so that you can be an absolute sniper when the time is right. Because I think if you deplete your mental capital on days that, because everybody has market conditions that are more suitable to them, right?
100%.
And we are all so different. Some people can scalp and get in 1 minute, get out the next. Not my style. Nope. So like knowing what works for you and only trading that is so much better. I do want to see, so, we kind of discussed price action. We're leaning bearish. Market's going to open here soon. Let's take a look at some of the event contracts. I'd be curious at what you're leaning towards with ES.
Yeah, absolutely. So, and just to mention, right, just quickly go on that 3 for 3, just to finish it off. It's basically, your objective is to use that as a way of confirming strength or weakness, right? So if you're like a pattern breakout trader or you're a MACD trader, right, or whatever, right, all you're expecting is to get a reaction to your setup trigger, right? If your setup doesn't get a strong reaction, then how can you make the argument that you're actually going to get follow through on that thesis? So that's what we're waiting for, right? If you get a pattern breakout, if you get a trend line rejection, and then you see, 2 out of 3 elements of strength come in, or 3 of 3 elements of strength come in, then you've got that opportunity, right, for that follow through. But if you get 1 out of 3, then you don't have that conviction, right, that there's a lot of other people that are interested in the same idea.
1000%. And I think, trading is all a matter of probabilities, right? Nothing is guaranteed, nothing is perfect, but the more things that you have working in your favor. I know a lot of people always say, like, you can't just have one reason to enter a trade. Like, you got to have 3 reasons.
Stacks up, right? Yeah.
So
I like to look at it same way like a lot of poker players do, where like I want to make decisions where I have a positive expectation of making money. I'm not really going to make money on each decision, but if I make that decision 100 times, I should be profitable at the end of those 100 times.
Consistency is everything, right?
And consistency in your application of your strategy is such an underrated part of being consistent, right? Where you can think that you're being consistent, but if you're bouncing around from idea to idea, or different contracts or strike prices, or different stocks all the time, you're not going to find that consistency in your trading.
Well, the thing is too, is you're sort of depleting that self-trust, right?
Yeah.
And one thing I've learned, this past year, I mean, trading is the absolute like mirror to yourself, self-discovery, your personal flaws, your characteristics, your traits. So much of what goes on in trading is reflected in your personal life in a million other ways. And I think so much of it does come down to the importance of self-trust, and really it's so cliche, but planning your trade and trading your plan, because once you steer from that, you don't have that security, like that sense of self in terms of how you trade. Somebody in the chat is actually asking if you could repeat the 3 elements. So do you want to give me like a quick recap, and then we'll go?
Absolutely. So we care about 3 things. We care about the previous candle shape. So we want that to be strong looking candle. So preferably not much of a wick, or a wick that if you were to change the candle body for an arrow would be pushing it towards your thesis, right? So if it's a bullish candle, you want that wick to be bottom heavy, right? If it's a bearish candle, you want that to be top heavy. And then once we have a strong candle, right, we want to confirm that strength with volume. So if we see building momentum, it's hard to say momentum is building if that volume is getting turned down when you're getting there. So always that sort of increasing volume profile. And then once we have strong candle, strong volume, we want to make sure that price is telling us that same story. So the more consistent that all 3 of those elements are, or the more consistent that story that those 3 elements are telling us, the easier it is for us to anticipate a trend day.
I love that, the thinking of the wicks as arrows. I think that's so good. I've never thought of it that way.
Like, it's such a good visual, because you can see wicks that the color will trick you.
And it'll make you, I feel like it'll make you not want to fight the trend when you see it that way.
Yeah. I've got a little trading script, like on TradingView, that's just, it puts an arrow below or under my candle that tells me the wick. Yeah. And it's like such a really helpful visual when you're looking to enter your trade. Like, it's a nice little, okay, totally. Is this telling me that same story? Is it consistent?
Don't fight the trend. Okay, let's pull up our event contracts. Okay, so I am an ES gal. Let's pop in here. So we're at 39.19 right now. Let's take a look at our strikes. So essentially with the event contracts, you can look at different strikes and basically place a trade on whether you think, theoretically, I mean, above 4,000, very unlikely to happen. But if I were to purchase a contract that says yes, and magically we do end up closing above 4,000, I would have paid 75 cents for this contract, but I'll end up closing out at $20. So the risk reward can be delightful. Obviously, we're not going to go that out of the money, because it's, crazier things have happened in this market. I'm not going to say it's impossible. It's definitely not. But what strike are you eyeing, Michael?
I would say probably the 39.25s. I would say that probably be my one that's catching my eye here probably the most. Just kind of split the difference, like not to be too aggressive. If you get follow through past or over, you're in a good position where you can kind of maybe find a little bit of comfort.
Yeah, totally. And see, like, the closer the yes and the no's are together, that means you're sort of going for a safer strike. You're not going way too far out of the money. The probabilities are a little more in your favor.
Yeah.
And I know for me, I tend to like to place these trades sort of later in the day. I do always like to see what price action is doing, maybe an hour before close, a couple hours before close, because I know a lot of times we can get our bigger moves during that time period.
Yeah.
And, I can kind of go in and, especially if we've developed some form of range, right? I always think of, when you start trading later in the day, obviously there's gorgeous opportunities in the morning, but a lot of times that last hour or two, you can kind of assess the price action that's already happened. Like it's sort of like going into, I always think of it as like college. You're going into an exam, but a friend's already taken the exam and they've kind of told you like, hey, make sure to this, like this is on the exam. So you have a sense of what the PA has been for the day.
You don't have to front run the trend.
1000%. So I always think of that as like a little bit of a cheat and a hack because, we always want to trade the whole entire day, but that's sort of my treat to myself. Like, hey, if I can only chime in towards the end of the day, I kind of, got to look at my neighbor's study notes. Like I kind of know.
I've got some evidence, right? Like, and that's so helpful. Like I'm kind of the same way. So in the mornings, my objective, if I know what the trend is, right, my objective is to try to get the best price possible. So that for me is never on a just chase a breakout, right? Like I want to get that pullback to happen as aggressive as possible so that I can get the best risk reward ratio for my money. In the afternoons, it's okay, what's the pattern that's been established? Hopefully it's continuing what the daily trend is. And then I can look for that sort of continuation breakdown and that continuation move if that volume steps in. But for myself, like I mostly trade the morning session. I would say that's where most of my action happens. And then in the afternoons, it's more, okay, I'm setting up what's my information I'm going to use tomorrow morning.
I love that. I'm so going to think about it differently now with your three out of three system.
Yeah, it's just like find the trend, find a pattern intraday that supports that trend, right? And then look for the best price action that can get you that follow through.
Yeah. And I think I love the whole day-to-day concept because look, we have to be honest, this whole market has been a constant like bulls and bears, right?
Yeah.
Everybody wants something very concrete and clear. Like everybody wants a clear direction. They want to know. There seems to be a mindset of either like we're going to all-time highs or we are getting a limit down day. Like those are the two extremes that people are constantly like battling, I feel like. So there's always a bit of an expectation and a bias that goes in when you get ahead of yourself. But when you're just considering, we have our chart, we have, historical price action, but then let's start with yesterday. Let's see, what the volume was. Let's see what the candle looked like. Let's see what the follow through is like. And that way, I think the beautiful thing is you're not battling the bias that is so, I mean, it's human nature. It comes up. Like we don't love uncertainty. So we want to kind of shape what we think is going to happen, but you can't get married to that.
And the markets are the same, right? Markets love consistent stories. So the reason, right, why we're in such a like tumultuous period with price action is because there's no consistency from how we actually can solve this inflation crisis, right? We're like waiting and hoping for certain data, and then we're like bouncing around and picking which one's the most important, right? Where it like suits the narrative. And so as long as that's going to be the case, right, you're not going to get a consistent bullish breakout from bulls, and you're not going to get a consistent bearish breakdown from bears because there's no, like you said, there's that fight, right? So you have to find that consistency or that sort of, baby trend day in sort of a shorter context where you can find those little intraday moves, those, intra-week moves or something along those lines. And then just continually put yourself in situations where the risk reward is always in your favor, right? Like if you're chasing trades, you're chasing breakouts right now, then you're going to put yourself in a bad situation. But if you can wait in on a pullback, right, you can basically be protecting your entry before you make lower lows or before you make higher highs. And then if you get faked out, no worries, right? You made a little bit of money. It's a scratch trade. But if you get that breakout, well, now you're getting paid huge. And, the chop that you've kind of dealt with over the last week is no longer that frustrating.
Yeah, 1000%. I love your insights and wisdom. Michael and I we like DM each other about, discipline.
Just step counting. Always step counting.
And our steps. So I have a firm belief that sort of like what you do in real life gets reflected in your trading.
Yeah.
And there was a lull where my trading wasn't great. I just wasn't like fulfilled in a lot of areas in life. And I actually looked at my steps chart and I was like, I went from like 10,000 steps a day average to like 6.
Yeah.
You know, is this in some way a reflection? And so him and I have been little step counting buddies, and you know, it's all relevant.
It's like I can see it in my dog. Like usually I notice in my dog, like when my dog starts to be like a bit agitated or needs a ton of attention, it's like,
Needs
oh,
more
I
love,
didn't.
more time, more
Yeah.
steps.
Then it's like, oh, I'm probably like neglecting something if he's feeling this way. And then I check my
1000%.
step
We're all feeding
counter. Yeah, or check my Strava, and it's like, oh, I haven't gone for a run in 3 days. Like, no
Yes.
wonder, like, I'm feeling like pent up, and like when price action doesn't go my way, I'm like banging the table, frustrated. Like, it's because I'm not being proactive and protecting myself from myself.
4 days of chop and you haven't gotten your steps in? No bueno.
Yeah, just sitting
No
there
bueno.
staring. You may as well pull your eyes out. That's just pure frustration.
Okay, so it has been lovely having you. I'm looking at the market right now. Looks like we're just continuing to go down. We're at 39.14. So I, again, am keeping my eyes on the 3,900 level. Curious to see if we have some support, if we get a little bounce there. And yeah, just excited to see how the price action continues. Michael, lovely, lovely, lovely to have you on. Thank you so much for sharing your strategy with us. I'm definitely going to apply that. And I think everybody learned a little something today.
Yeah, well, if you guys like the video, please like and subscribe. If you want to learn more about me, you can follow me at DTR_trading on Twitter. And happy to give you guys as much information as you need.
Yeah, Michael's feed is great. Give him a follow. It's on the tweet. All that good stuff. It's been a pleasure to have you. And guys, thank you so much for tuning in. If you could hit like, share, subscribe to the channel. Would love to have you guys back and tuned in into future shows. And go ahead and give the Tradeovate app a download. This has been a lot of fun, the whole event contract thing. I know I'm busy with a full-time job. I don't always have the time to step in and do the quick, few minute trades. But simplifying it to like a yes or no type of situation, it's been a really fun little tool to have in my back pocket.
You'll be a better trader if you can reduce the anxiety in your decision-making process. Binary outcomes where everything is planned out for you is going to remove that anxiety because you know the terms of the deal that you're agreeing to before you place the trade.
1000%. All
anyway,
right.
Good luck, guys. Happy hunting. Have fun out there.
Bye. Take care.
Bye.